Sure, thank you. Well, time to take a look at your money now at 616. The first half of 2024 proved to be a profitable time for stock market investors. In the first 6 months of the year, the S&P 500 gained 14.5%, well above its historical average gain of just 4.7%. The tech-heavy Nasdaq also surged 18.1%. So what's driving this rally in the U.S. stock market, and what potential challenges might investors face in the second half of the year? Financial advisor Mark Grabacheski is joining us now off of Zoom to break down the numbers. And good morning, Mark.
Morning, Devin. Happy Monday. Great to see you again.
Absolutely, you as well. Well, despite this current environment of high inflation and high interest rates, why are we seeing this continued surge in the U.S. stock market?
The first half of 2024, Devin, is pretty much kind of like a continuation of what we saw last year. For the full year of 2023, the S&P 500 gained 24%, while that Nasdaq, which again contains a lot of those big tech heavyweights, rose a massive 43%. The main catalyst for this year and a half rally in the stock market is this groundswell movement towards artificial intelligence or AI. And this movement is being led by these massive companies that either directly create that AI technology or are expected to significantly benefit from AI technology. Now, for perspective, Devin, the S&P 500, it tracks the stock performance of the 500 largest companies in the U.S. And as you just mentioned, in the first 6 months of the year, the S&P 500 gained a hefty 14.5%. 63% of that gain, Devin, was driven by just 5 companies: NVIDIA, Meta, what we call Facebook, Amazon, Alphabet, or Google, and then finally Microsoft. And these 5 companies are all major players in that AI movement.
So how much longer do you think this AI movement will impact the stock market?
Yeah, look, back in the late 1990s, early 2000s, I was a trader still on the floor of one of the financial exchanges in Chicago, and I witnessed firsthand the impact of the stock market from the technology boom. The innovations of the internet and cell phones, laptops, and how that influenced consumers, businesses, and then ultimately the U.S. economy. And I think, Devin, the feeling on Wall Street is that the innovations that AI will bring to science and medicine, research and development, engineering, even the arts will exponentially be much, much more profound. And I think the stock market is projecting this profound impact that AI will ultimately have on our economy and our daily lives. And that impact is being reflected by this year and a half rally in the stock market, being driven again by these big tech companies that are literally spending billions and billions of dollars each year to drive this AI revolution.
So what do you think are some of the bigger challenges that the stock market might face in the second half of the year?
Yeah, a great question, Jim. Look, on the AI front, one of the bigger concerns is how quickly can these big tech companies start to monetize their investment in AI technology? Again, companies like Meta, Tesla, Amazon, Alphabet, Apple are literally spending billions of dollars on AI technology. How quickly can they start using that new AI technology to either reduce their operating costs or develop new consumer products that can start driving added revenue? They can't be spending all this money without seeing some type of financial return. That's not a model for success. Now, on the broader stock market, again, the biggest concerns remain high inflation, high interest rates. On Thursday, Devin, the latest inflation report showed that, look, inflation does continue to moderate. However, there are still significant concerns that this inflation problem, it's clearly not over. and that it might remain elevated for quite some time.
These are all things we're talking more and more about, and want to thank you,
Yep.
Mark, and always appreciate your expertise. And we'll see you next Monday.